Revenue Service IRS tax news. IRS issues another 430,000 refunds for adjustments related to unemployment compensation. IR 2021-212, November 1st, 2021, Washington. The Internal Revenue Service recently sent approximately 430,000, more than $510 million to taxpayers who pay taxes on unemployment compensation excluded from income for tax year 2020. So let's recap this one. Normally, the unemployment, when you receive unemployment, is something you would have to include in income, but they basically made an exception, meaning exempting some of that income for the tax year 2020. However, they did that late so that people could not really compensate and adjust for that change in the law by the time they filed their tax returns, oftentimes. And so then the question would be, what do we do with relation to that adjustment? A little bit more detail on that. Many more people qualified for unemployment in 2020 than in prior years. So obviously the unemployment was up a lot in 2020. Normally, you're required to take them from the state generally and then add that to the income on the federal tax return, income being bad for taxes because income means on an income tax that increased income means that you're going to be owing possibly taxes on that income. So then in order to lower the burden or give a benefit, in essence, for the period of 2020, they then said that we're going to exempt some of that unemployment income so that you don't have to record it as income. And therefore, that's good because that means if you don't have to record income that you actually received on the income tax return, you're not going to have to pay income tax on it. So they tried to do a nice thing, a good thing there, but they issued the law late so that many people were not aware of the law, or even if aware of it, it's been a change that, people have been used to the other way that it has been for so long that people still were filing their tax return and they claimed, in essence, the income and possibly pay taxes on it. So then the question would be, well, after the return was filed for 2020, if it was incorrect, what do we do at that point in time? The options being, 1, should I adjust the tax return, filing a 1040X to adjust for the error? Or 2, will the IRS basically pick up and be able to make the adjustment themselves? And the general ruling on the IRS was to say, we can make the adjustment on our end, not requiring everyone to file a 1040X in that situation, due in part to the fact that it's kind of the IRS's fault or the government's fault because they issued the law late and people filed the tax return before they had the ability to make the changes for it. So, and there were some exceptions to that rule. So generally the thought would, you probably want to then make the change on your side using software if you can, see what the adjustment would be, and then see if the IRS fixes it properly, giving you the refund that they've been working on and giving out. It's been a substantial process over there to do that. It's a lot of work, I'm sure. And now they're issuing those refunds out and then double check to see if the government came up to the right figure that you would come up to if you would to remove the unemployment basically from your wages. So that's what they're working on now. So they're still trying to fix these tax returns for the unemployment issue and adjust them and send out for claimed unemployment as wages, pay taxes on them, but that don't need to after the change of the law took into consideration the fact that you could be exempt for unemployment income for 2020. Okay, so the IRS efforts to correct unemployment compensation overpayments will help most affected taxpayers avoid filing an amended return, which is nice. So far, the IRS has identified over 16 million taxpayers who may be eligible for the adjustment. Some will receive refunds while others will have the overpayment applied to taxes due or other. So you might say, hey, where's my refund related to this unemployment compensation thing? And remember, by the way, some people get confused in terms of thinking they're going to get the whole amount back that they got in unemployment. That's not the case because you're only going to possibly get an adjustment for the impact that the unemployment income had on your taxes, which will be dependent on your tax rate that is applicable. So if you're thinking you're getting the whole unemployment amount back, no, it's only the amount that's going to increase the taxes that you paid on it based on it having it in income. But in any case, also, if you're expecting to get a refund back, and you owe taxes for other things, such as back taxes or something, then the IRS will do what they typically do. They'll keep the money and pay off your bills for you for the other things that you owe the money on. So the American Rescue Plan Act, ARPA, of 2002 to $10,200 in unemployment compensation per taxpayer paid in 2020. The $10,200 is the amount excluded when calculating one's adjusted gross income, or AGI. It is not the amount of the refund. So remember, they don't have to include it in income up to the $10,200. So whatever amount that you had, then it's $10,200. So if you had $10,200 of unemployment, in other words, you're not going to get $10,200 of a refund. You're going to get the impact of that $10,200 on the taxes that you ended up paying, in increase based on that, which would be reflected by the tax rates that you're at, as well as possibly whether they affect any kind of credits that could be applicable, and so on. So the exclusion applied to individuals and married couples whose modified adjusted gross income was less than $150,000. Earlier this year, the IRS began its review of the tax returns filed prior to the enactment of ARPA to identify the excluded unemployment compensation. To date, the IRS has issued over 11.7 million refunds totaling $14.4 billion. This latest batch of corrections affected over 519,000 returns, with 430,000 taxpayers receiving refunds averaging about $1,189. Now, that's an average refund of $1,189. You can't really go on that because that average is really, it could be skewed way on, there could be outliers on both sides of that average. What you really want to think about is your actual amount of unemployment, and then what is going to be your tax rate basically on it, and think about what your refund possibly could be. In that case, would be more accurate than thinking about this average, I would think. But in any case, the review of returns and processing corrections is nearly complete, as the IRS already reviewed the simplest returns and is now concentrating on more complex returns. So they tried to get the easy ones, the low-hanging fruit, first, in part because that makes them look better, because then that means they're taking action. You can see them taking action sooner, doing all this work, even though they're doing the easy stuff up front. And then they're going to go to the hard ones. The hard returns, you would think, would be the ones that have the higher incomes, but not necessarily, because all this overlapping of these benefits, like the child tax credit, and now the advanced credits at this time, and then the earned income credits, and then coupled in with the unemployment, these things all weave together and affect each other in ways that can be somewhat complex when you adjust the income levels. So low income tax returns are actually becoming somewhat complex, more complex than a lot of mid-income tax returns and whatnot. So in any case, the IRS plans to issue another batch of corrections before the end of the year. Impacted taxpayers will generally receive letters from the IRS within 30 days of the adjustment, informing them of what kind of adjustment was made, refund payments of IRS debt payments or payments offset for other authorized debts, and the amount of the adjustment. So when you get that adjustment, I would compare that adjustment basically to what you think the adjustment should be using your software, recalculating it if you can, and see if they got it right or not. And if they didn't, you could take further action from there, and hopefully they got it right. Or you could just kind of trust the IRS to do it right and say, I'll just, do your thing over there, IRS, and give me what you think you should give me. So the IRS also making corrections for the earned income tax credit, additional child tax credit, American Opportunity Credit, premium tax credit, and recovery rebate credit amounts affected by the exclusion. Most taxpayers need not take any action, and there is no need to call the IRS. The IRS will be sending notices in November and December to individuals who did not claim the earned income tax credit or additional child tax credit, but may now be eligible for them. These notices are not confirmation that they are eligible for these credits, and will require a response from the taxpayer if eligible, rather than filing an amended return. For taxpayers who became eligible for either credits and or deductions after the exclusion is calculated but not claimed on their original return, they must file a Form 1040X amended U.S. individual income tax return to claim the new benefits. See the 2020 Unemployment Compensation Exclusion FAQs for more information, including details on filing amended returns. There's a link to that here. There'll be a link to this in the description.